Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, November 19th, 2020. Thank you so much for joining me. The title of today's podcast, Jobless Claims Are Back Up. It's already Thursday, as I like to say. The weeks just get quicker and quicker. So it's our typical discussion. Weekly jobless claims, market performance, the Federal Reserve's balance sheet, M2 money stock, both making record highs, by the way. And we will get to that momentarily. But first, let's get some of the market headlines out of the way. Dollar index overnight is currently in the red slightly, trading at 92.23. Let's see some movement against some of the major pairs. We have, there's some decent rallies across the board here. British pound to the U.S. dollar is gaining about 0.25%. The Aussie and the Kiwi, the New Zealand dollar against the U.S. dollar, are both up about 0.33%. Recall, in the currency markets, those are sizable moves. So that's something to pay attention to. Wall Street today, choppy session, but it was able to reverse its losses. Nonetheless, overnight futures trading, Dow Jones is currently down 0.2%. The S&P 500 is also in the red, down about 0.4%. The NASDAQ 100 is flat. Japanese cash trade is down 0.5%. And the European markets are also a sea of red, but nothing major. Nobody lost more than about 0.9%. Cash trade in Australia also down about 0.1%. So a little bit, I guess, vaccine fatigue. I don't know. Buy the rumor, sell the news that it's finally here. I mean, what benefit really is a vaccine going to do at this juncture? Because not having a vaccine and still being in the midst of all of this madness and chaos, stock market's still making all-time highs. So what good really is the vaccine going to do with those? Is it going to allow those record valuations to be justified? I don't think so, but I guess we'll see. On the commodity front, WTI is trading at $41.59 a barrel, Brent at $44.13 a barrel. Natural gas got clobbered a little bit today, down I think about 4 percentage points, trading at $2.62. Gold and silver, not too hot a day, but nothing terrible either. Gold is currently at $1,868 an ounce. Silver at $24.16 an ounce. Those are spot prices. And to round it out with the bond front, we have the U.S. 10-year junk note yielding 0.83%. This is lower than where we stood yesterday. So I guess another flight to safety into the safety, if you will, of the Treasury market. It's a junk market, junk bond market as far as I'm concerned, but still perceived as somewhat of a safe haven. So again, a breakdown, a misconnect between what the stock market has been telling us and what the bond market has been telling us. And historically speaking, again, the bond market is usually the better prognosticator. It's usually the more level-headed of the markets. And it's basically telling us it is not buying into any strong period of growth ahead. And I, of course, agree with that. Now, maybe if you start to see a reversal in the bond market, I'm still not going to say that that's indicative of growth. I'm going to say that's indicative of oncoming inflation. But we'll get there when we get there. But I do think it's going to occur in the not-too-distant future. Let's get rid of some of the Federal Reserve nonsense here. Federal Reserve's balance sheet making a record high. Not surprising. We knew this was going to be happening. $7,243 billion. $7,243 billion. This is an increase from the prior week of about $68 billion. So there you have it, folks. The Federal Reserve has been, it's been telling us that this was going to happen for quite a while. Not explicitly, of course. You have to read the tea leaves. You have to read between the lines, but that's what we do here at the Capital News. It's going way up. What the Federal Reserve is looking for is, again, that justification. And they want Congress to pass what they call stimulus, what politicians call stimulus. It's not stimulus. It's spending, and it's wasteful, and it's not free, and it's very, very expensive. It saturates current growth. It saturates future growth and prosperity. But what it does do is it hits everybody in the pocketbook, because now your taxes are going to go up in the future to pay for this. And the dollars in your pocket are going to be worth less and less and less until they are rendered worthless through the effects of inflation. And that's what this is. So a record high north of $7.2 trillion. We are just getting started. This is going to be the next leg up. M2 money stock also making a record high, $19.067 trillion. This is an increase from the prior week of, I think, about $170 billion, give or take. Unbelievable. 19 trillion. This has continuously been making new highs basically on a weekly basis or close to it. $19 trillion. It's nearly impossible to wrap your head around these numbers and to comprehend them. But they just keep marching along, and nobody says a damn thing about it. That's a travesty. This is the real virus. This is the real pandemic. It's these out-of-control central banks and their printing presses or their computer screens and their balance sheets. And it's these out-of-control politicians and federal governments and state governments around the country and around the world. When's it going to end? It's a legitimate question. You don't know, I don't know. But I think it's safe to say that if we continue on this path, and we are, that it's not going to end well. At least not for the vast majority of people. And that's a sad statement. Now on to initial jobless claims. For the week ending November 14, 742,000. This is an increase from the prior week of 31,000. For the week ending November 7th, the initial number was 709,000. That number has been revised up by 2,000. So the revised number for the week ending November 7th is 711,000 this week, or should I say the week ending November 14th, 742,000. So that is in the wrong direction. That is why today's podcast is called Jobless Claims Back Up. I hope that this is not a new trend to the upside, but it's not going to surprise me if it is. Because the Nobody Cares Act, all those funds, they're starting to be evaporated. A lot of those programs are dried up, PPP loans, what have you. The states are broke. We still have a lot of people who have yet to receive their benefits. So just, again, not to sound like a broken record, but that's why I do this every Thursday, is so the audience understands and can remember that these programs, the Nobody Cares Act, everything else the federal government's doing, the Federal Reserve's doing, these are highly distortionary. So it makes it very difficult to get a clear, crisp, sharp picture with respect to employment and unemployment. And we are still going through these programs. Now, some of them are going to be expiring. Some of them have pretty much already exhausted themselves. Some have been extended. So I'm going to have to do a deeper dive here in some of this stuff to sort of make heads or tails as to what's going on. But as we're seeing an increase in COVID-19 cases across this country, we're starting to see states and mayors come out and say, okay, governors and mayors come out, I should say, we're going back into lockdown, or we're going to put in a curfew, whatever. Now, this might not be as severe as it was earlier this year, but that's just as of right now. So are we already seeing some of those effects? Is that why this initial claims number has gone up from the prior week? Or is this just what was going to happen anyway as we enter the winter months and as a lot of these programs become exhausted? That's what I'm saying. It becomes difficult to do. And part of that is, I think it's by design. I think the confusion is by design to some extent. Then with respect to continuing claims for the week ending November 7th, this lags a week. 6.4 million, we're rounding up, 6.4 million. This is a decrease from the prior week of some 429,000. So again, that's in the right direction. But we have to ask ourselves, is this just simply an expiration of state benefits? Or is this people actually finding jobs? I imagine it's a combination of both. I wish I could give you the breakdown as to who's finding jobs versus who's just expired and now they are put on to another program, which we're going to get to in a moment here when we take into consideration all persons claiming UI benefits in all programs. So that takes into consideration regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, and pandemic emergency UC. Those are two of the children of the Nobody Cares Act. Extended benefits, state additional benefits, and work share. We now come to a grand total for the week ending October 31st. Recall that this figure lags by a couple of weeks. Grand total of $20,320,000. Still a staggering figure. But the good news is, I guess, at least on paper, is that this is lower from the prior week ending October 24th of some $841,000. So we have regular state. That declined week over week by $383,000. Pandemic unemployment assistance, PUA, decreased week over week $751,000. And then the pandemic emergency UC or PEUC gained $233,000. And another thing to note too is extended benefits, because that gained $78,000. So if you run out of regular state benefits, you have potentially a few options. You can file for extended benefits. You can file for PUA. You can file for PEUC. Now, of course, just because you file doesn't mean you're going to qualify. But those options exist. And, well, the last couple of weeks, well, the last several weeks really, with respect to PUA and PEUC, we've unfortunately been seeing those numbers get higher and higher. So it's good to see PUA declined by $751,000, but I still don't know if that simply means that, okay, all these people found jobs or they got called back into work. We hope that's the case, but I'm not so certain. Have they been exhausted? Or are these people giving up, so they're no longer going onto their state portals and making a claim because they can't get through? Nobody's answering their phone calls. Nobody's answering their emails. This is still problematic. We talked earlier this week about the food lines. I mean, the focus was on Texas. That's what made the nightly news. But you just saw cars lined up as far as the eye can see. We are far from out of the woods. This is not a V-shaped recovery, not by any stretch of the imagination. And despite seeing that big rebound in GDP, some of which we discussed yesterday, I unfortunately think it's going to roll over when it comes to the fourth quarter and probably the first quarter of next year, and quite possibly beyond. Because I still believe, and I take no pleasure in saying this, but I think next year is going to be worse than this year, whether there's therapeutics, vaccines, or whatnot. Because all of this artificial stimulus, we'll use the word, it ain't free. It's extremely expensive. And we're all going to have to pay for it. And that's going to come at the expense of future growth and prosperity. And as I've been saying here for months, if these politicians and central bankers think that this is the solution, and that they're going to tell us that there are no negative consequences whatsoever, none whatsoever, well, then they've solved the riddle. They've created or they have discovered the free lunch. We don't have to pay taxes anymore. And I would argue, because this is just using their logic, not only do I not have to pay taxes anymore, but I shouldn't have to pay my bills anymore. Because there's no negative side effects. If it's good for the government, it's good for me. We the people are supposed to be the government. You see how I'm making this connection? Shouldn't be that difficult. That's a question that needs to be asked. It needs to be asked of Chairman Powell. It needs to be asked of Treasury Secretary Mnuchin. It needs to be asked of Vice President Pence, Larry Kudlow, Peter Navarro, President Trump. It needs to be asked of Joe Biden, Kamala Harris, your congressmen and women, your senators. Ask them that question. How much longer can we do this? What are the consequences? Or are there none? Is this truly the free lunch? And why did it take us so long to figure this out? Why have people been paying taxes their entire lives? All we had to do was print the money. And the reason is because they didn't discover the free lunch. They didn't create the free lunch. And they know it, but they're not going to admit this to anybody. And unfortunately, most people don't even know to ask that question because so many people are so desperate right now, unfortunately, because they can't find a job, or maybe they are, but they had to take a pay cut. Maybe they don't have benefits. You know, most people are employed by small businesses. A lot of small businesses don't offer benefits. And if they did, in order to survive, some of them may have cut those benefits. Say, okay, you can stay on, but I'm going to have to cut the benefits because we got to stay alive here. You can have a job but no benefits, or, you can have nothing. You multiply that across this country. You multiply that across the globe. You have a big problem. And most of these issues have not been resolved. This is the Nobody Cares Act. We know where most of the money is going. We follow it here every single day. These are your financial assets. These are the markets. This is why these prices are through the roof. This is why we have astronomical valuations. Not because we have astronomical economic growth. If that was the case, then you say, okay, well, there's a tight correlation between the stock market and the economy. Well, that can make sense. But there isn't. And if you were to chart out corporate profits against the S&P 500, I don't think there's ever been a time, I'd have to bring it up, but I'm not going to do that right now. I don't think there's ever been a time in recent history, and when I say recent history, I'm talking 40 years, where we've seen such alligator jaws, meaning such a divergence between corporate profits and the performance of the S&P 500. So one of two things pretty much has to happen, right? Either profits have to really turn around to catch up to where the S&P 500 is trading, or the S&P 500 is coming down big time, if history is to repeat. If markets, in some form, are going to rear their head, which I hope happens. Because this is supposed to be a market economy. This is supposed to be free market capitalism. It is not. But that's what it's supposed to be. And as painful as it will be, or would be, it's what's needed. Are these corrections in the stock market and global equities? But particularly here in the United States, because we've just been on a rocket ship. Despite the heartbreaking narrative of COVID-19, of high unemployment, of lockdowns, of restrictions, of curfews, of who knows how many millions of people in food bank lines, etc., etc. It's just unfathomable that we are in this position. And a lot of people don't ask why. Because as long as their 401k is up, or as long as their brokerage account is up, they don't care. They don't care. They don't care at what expense. They don't care it's at the expense of future prosperity. They don't care that it's at the expense of really the heart and soul of this country. What built this country, what made this country great. They don't care because they just want paid. That was the $1,200 stimulus check. That was the extra $600 a week if you were on unemployment. Sit down and shut up money. Because $1,200 to a lot of people is a lot of money. An extra $600 a week to a lot of people is a lot of money. Sit down and shut up. While the powers that be run away with billions and trillions. This is what's going on. It's happening right before us. And you don't hear anything from either side? I'm going to repeat it. 96-0, no votes for America. That was the Nobody Cares Act. 96-0. Where are your Tea Party senators who were so concerned when Barack Obama and Joe Biden were in the White House? Where are these guys at? Where's Senator Rand Paul and Ted Cruz and Mike Lee and Marco Rubio? They used to be so concerned with the fiscal state of this country. Now they couldn't care less. Where's Bernie Sanders and Elizabeth Warren? So concerned about corporate welfare and bailouts. Where are these people? Nowhere to be seen, nowhere to be heard. You understand why? Because they don't care about you. They don't care about you. They don't care about you. That's why you shouldn't be voting them into office. That's why you should not be supporting them. It's why they have to go. Everybody means everybody. Two-party system, they're only giving you two options. And it's really just the appearance of a couple of options, because they're going to do whatever they want anyway. And that's been proven to us time and time again. I warned about the Nobody Cares Act before it was the Nobody Cares Act back in March, with our letter and with our podcast. Representation and recourse. Check it out at thecapitalnews.com if you have not. I know a lot of you have, and I thank you for that. Warning of what was going to take place, the distortionary effects, all of the things that were problems and issues, structural concerns and issues prior to COVID-19, and how they were going to use this pandemic as an excuse to justify the unjustifiable. And that's exactly what they have been doing, and that's what they're going to continue to do. They can play politics all they want, an incoming administration, an outgoing administration, the headline economy. Well, as long as Crazy Nancy comes to the podium and says, well, we're talking, that might be enough. Or if Mnuchin comes out and says, well, we're talking, that might be enough. Or Larry Kudlow comes out and says, we're talking, that might be enough to juice the markets a little bit more. And if it isn't, don't worry. We'll talk about the IPO market. We'll talk about the tech sector. We'll talk about Tesla being included in the S&P 500, which is a travesty because they make no profits. We can talk about vaccines or therapeutics, and of course there were more stories about that today, but I don't want to talk about it. They can even go back to the U.S.-China trade talks if they want to. They can pick so many rabbits out of the hat, it's not even funny. Can't make this stuff up just to pump the markets. But the real engine behind all of it are the central banks. An expansion of their balance sheet. You had Christine Lagarde this morning, president of the ECB, the European Central Bank, continuing with her message in harmony with other central banks the world over. We're going to do whatever it takes. The countries of Europe, the governments of Europe have to step up and do more. Haven't they done enough already? And the answer, of course, is no to these people because it's never enough. They know what's coming. They know what is going to happen. They know there is not a V-shaped recovery. They know what they did in conjunction with their federal governments only gets you so far. This stuff needs to be paid back. Your taxes go up, or inflation starts to take hold. You really start to see it, not just in financial asset prices, but in consumer prices. And a lot of people are already seeing that. It's here. They're 1.9, 1.82%. It's all BS. It's all lies. It's not even close. You know this. The real people know this. If everything was so affordable and everybody had so much savings, then they wouldn't be in food bank lines for hours and hours. Just connect the dots, have some common sense. That's really all it takes. So it's no surprise that today, the Department of Labor reports that jobless claims have gone back up. 742,000 for the week ending November 14th. I hope this is not the start of another trend higher, but we're not going to be surprised if it is. Again, if you just want to go back to recent memory, before COVID-19, we're around 200,000, 220,000 claims per week. So we're still 3.5 times that. We know what the solution is. It's free market capitalism, but that is not going to take place. At least not from our policymakers. But what we can hope for is that nobody is bigger than the market. No institution is bigger than the market. Which means that the markets will have its day of reckoning. And it's not going to be pretty at all. We've talked about how the stock market has come down. Of course, recent memory. Fourth quarter of 2018, 20%. First quarter this year, 40%. Within 4 or 5 weeks. So it's more severe, greater rapidity. What's going to happen next time? 50% decline in 3 weeks? What are you going to do? This is a foundation built on sand. It's a house of cards. Whatever metaphor, analogy you want to use it. Because I can see this as clear as day. But I hope my vision's blurry, because it's not a pretty picture. Even the correction is not a pretty picture. And it isn't. The zombie economy, $1.4 trillion worth of obligations, meaning debts, on the balance sheets of zombie companies, now representative of about 18 to 20% of all U.S. firms. That's just in the U.S. That's $1 trillion. If you got rid of $1 trillion, you'd get back to the levels of the great financial crisis. That's $1 trillion that's not going to go back into the economy, research and development, investment. That's just going to go back to paying off the debt. You see why debt is so destructive? You see why what they have done is not free? It is not a cure? You see why what they did, is the virus? Should be readily apparent, and I hope you see it. And if you don't, keep listening. Keep listening, because that's what this podcast is all about. Tell your friends, tell your family, tell your neighbors. Tell some stranger on the street to tune into the Capital News. I appreciate it. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Caritis. Godspeed.